we're finally starting to see everything kind of align like we had hoped they would. We've talked a lot of bad news just in terms of people missing the mark with a lot of this stuff, and it's finally starting to come around a little bit in our favor.
Welcome, everybody. Brian and I are going to be discussing 4 things that I think we need to be covering looking forward here. And number one, we're going to start with the best rates we've seen in 6 months. We're going to talk about what we're seeing in contracts right now. We'll give an update on the mortgage market, and that's certainly going to include a look at the economic data, which tends to look promising right now, at least for mortgage rates. Brian, let's start with the best rates we've seen in 6 months. That seems to be the lead. Where are we headed with that?
Yeah, I mean, we've finally started, and we're kind of talking a little bit about subjects 1 and 4 here. But from a market perspective, we're starting to see some trends that are very bond friendly, very mortgage market friendly. Not necessarily awesome news economically, which is what tends to happen with interest rates, right? When things aren't as good as had hoped for. Bonds get to be popular, which are what mortgage rates are priced on. So,
Sure.
Yeah, we've had a good trend here over the last couple of weeks where some of the anticipated numbers haven't quite reached expectations, and again, that's been very, very good for bonds.
Right. Well, from what I've seen and paying attention to it, the mortgage rates haven't really moved much during that 2-week span, which is always sort of welcome news because it gives you a little bit of time to kind of adapt to what's out there and what's normal, rather than having to follow volatility.
Right.
But what I think is great too is that those rates tend to be under 7. And again, as we've always said, it depends on each individual situation. But with rates under 7, at least that's promising for the time being.
It is. Yeah, it kind of flows into what we're seeing in contracts. So there's still enough supply that there's a few deals to be had, right? And so when we start looking at the difference between price versus concessions, meaning if the house price were to come down $10,000, here's what it would look like for my payment. Or if we get it at list price, asking price, and get $10,000 in seller paid concessions to help get us a better interest rate, the market, meaning behind the scenes with bonds and everything else, are really, really scared of a refi boom because investors that invest in mortgage bonds lose their tails when people refinance too quickly. So the gap between a regular interest rate without any points versus one where potentially the seller could pay it, I'm seeing a lot of that happen right now. So paying some fees to get the interest rate down, that gap between not paying any points and paying points, whether it's the buyer or the seller paying for them, seller most commonly, is the biggest gap I've seen in a really, really long time. So there's a lot of value in these points lately, a lot of bang for our buck to get our payment down really, really low. In fact, sometimes when we get a lot, we can get rates well into the 5s. So some really cool stuff that we're seeing come together.
Yeah, that's tremendous. That's actually really amazing news. From an inventory standpoint, since you touched on that, we actually just saw the numbers were released this past week. It said we've seen inventory reach levels we haven't seen in 10 years, which, look, guys, I mean, we're always looking for a silver lining in whatever news is out there. Forever, we've been talking about how depleted the inventory is. Now it looks like we've got true choices for buyers out there, which is great. It would be nice to have better interest rates, but the interest rates are what they are, and again, it's all relative. So they've been on the improvement when it comes to your choices. In most cases, a lot of people have a lot more choices right now than they have literally in 10 years. So that's an improvement. Now, if you're on the selling side, that presents new challenges that we haven't seen in a little while. That things are slowing down from how quickly things are selling. But again, you're either a buyer or you're a seller, and if you're looking for opportunities as a buyer, they're certainly out there right now. What are you seeing, Brian, as far as the economic data? You touched on that a little bit, but where are we headed with that?
Yeah, I mean, there's a billion different factors, and I don't follow each one of them every single moment of every single day. But a couple of the big ones have been in our favor lately. PCI is the Fed's favorite measure of inflation. I'm sorry, CPI. I always say that backwards. Consumer Price Index, and like I said, that's the Fed's biggest measure of inflation. That came in a little better than anticipated. There's a big unemployment that came out a little higher than anticipated. So these are all really good factors, at least in the mortgage world, maybe not specific to the inflation one is hopefully good news, and hopefully we see that trend continue. But the unemployment's a little higher than anticipated. PCE is another version of inflation that gets measured. Those aren't quite at expectations. And a lot of times when that happens, bond markets can rally. There's also been some, a lot of press about different presidential type news, and that's got some investors a little scared on a few things. So we've seen some improvements based on some of that stuff as well. So anyway, lots of relatively good news for the mortgage market, not necessarily for our checkbooks every month, but nonetheless, it's
well, right. I think it's probably good for everybody except a greedy corporate executive or somebody who's looking for the dividends from your sales. Right. Outside of that, having inflation news, that's positive is really good. We want to see that number come down. As far as the other economic indicators, we're always looking for the silver lining. There's always got to be some good news to balance out the bad news, and bad news sometimes turns into good news. So is there anything else you needed to share today?
I think that's it. No,
okay, great.
Kind of excited to get back to this and share some good news, and we're finally starting to see everything kind of align like we had hoped they would. We've talked a lot of bad news just in terms of people missing the mark with a lot of this stuff, and it's finally starting to come around a little bit in our favor, pretty much across the board. So we'll hope that trend continues, and we'll see what happens with rates and inventory and prices and everything else in the next few months.
Well, inventory is not going to get snatched up anytime soon unless rates really truly fall. If that happens, then we will see prices really start to accelerate again. Right. But at this point, it certainly looks like there's going to be a window of opportunity for buyers and investors alike. So I think that's great news from a standpoint of, what are your choices? You don't have to settle for the one house in the neighborhood that's available, but maybe you can look at 4, 5, 6 of them and, have some choices. Okay, Brian, until next time.
Good to see you, as always. Yeah.
Brian and I will be covering number one. Let's start over again. Let's not say breast right out of the gate. Okay.
That kind of video.
It'd probably sell better.